What's up, guys? Mr. 50 Flourish. Today I wanted to talk about how I took an IWM trade, 4 IWM trades to get $6,400. Pretty good trades. All right, here we go. So, all right, let's get right into this thing. Here we go. All right, so looking at the screen here, you can see IWM started off today at our key level at 250.21. And we bounced, and we had a really nice move. So what I like to do right now in the markets is wait for that 15-minute range, the first 15 minutes, because we usually like push, and then we'll do a reversal. So we pushed, we did a reversal to the downside, and I was like, oh man, we're gonna break. Big bearish candle here that occurred, but we didn't end up breaking. We ended up holding. So now we created what's called a double bottom, right? So we had bottom number 1 right here. And then we had bottom number 2 right here. All right, so bottom 1, bottom 2. So we had a double bottom here. I'm like, okay, cool. If we get this neckline break, I said this in the group. If we get this neckline break, this is going to be considered what's called a double bottom neckline. This is a setup, double bottom neckline break out. So I like trading breakouts because once you close above a previous high, then you get what's called a breakout, and you go into what's called discovery, which means, oh, okay, we established a new high. Now buyers and sellers are going to try to discover and try to see what the next high should be, okay? And some people are like, oh, well, the wick is right there. That's the actual high. No, it's not, okay? So yes, this is a high, but what you want to look at when you're trading is you want to see where buyers and sellers are agreeing that price should be. And how do you know what buyers and sellers are agreeing on price? Well, you know that by at the end of the session where we're closing. Okay, so closing and opening prices. So where the bodies of the candles are. Once we close, look at the body of the candle here. We close above this previous body closes, or these previous bodies. Once we close above that, that's considered a breakout. A breakout is not when you close above the high there. That's not a breakout. And if you're trading and you're like, damn, why is my trading not working? You need to pay attention to the bodies. And this is some sauce that people pay millions and bajillions of dollars to learn, but I'm giving it for the free ski as usual. But nobody's gonna watch these videos because everybody wants to be entertained and everybody wants to be some sheep. That's okay though, I don't care. I'm helping you guys who are watching the video, probably like 10, 15 people. Doesn't matter. Anyways, nice breakout here. The bottom neckline break. So I actually entered here. Oh, not here. Somewhere lower here, like 250.90 I think was my entry, because I saw this nice push. We had a double bottom, and then the volume RSI was starting to come back up, coming into purple space after being oversold, holding that key level. So I like key level bounces, key level breaks. Very good. So, and we're looking to go long. So I was like, all right, 250. We're probably gonna hit 252.31. So boom, we had that move, 100%. So I went up 118% here on this play. And then I left in 20 contracts out of a couple hundred contracts that I had. They were super cheap though. They were only like $7 per contract. So yeah, exited here on most of my contracts. I left 20 in and they got cooked. I was like, oh man, let me hold it till we break the 9 MA, and it went down 43%. So I was like, okay, so the last 20 contracts went down 43%. Still net a bajillion million percent. So I was like, okay, let me wait for a move back up. Boom, we bounced on the 20, but look, the volume RSI was still coming down. I was like, you know what? Fuck that. I'm taking puts. I don't like counter trend trading, but once we broke back below that previous high or that previous resistance, I was like, all right, so we didn't go from a resistance to support flip. We went from a resistance to break, which is not good. All right. So here, I ended up taking puts. I was like, oh, dang, puts. We went up 53%. Again, I'm getting 0 day to expiration contracts, which are very risky. The only reason you want to get 0 day to expiration contract is when you know a stock has a massive range. Well, usually you can only do 0 day expiration on ETFs, exchange traded funds, like QQQ, IWM, SPY, SPX, stuff like that. You can do 0 day to expiration, but unless it's Friday. So anyways, I got 0 day to expiration puts here. I got called, obviously 0 day to expiration calls here because I knew massive moves were coming very quickly. If you don't know if the stock is going to move quickly, you do not get 0 day. You get 1 day or further out expirations. Again, I trade options. All right. So entered here, 920 crossover to the downside. Volume RSI super low. If you know, you know. I'm not gonna explain the volume RSI, but 920 crossover, volume RSI, and then took profit somewhere here. Yeah, on the bounce of the 50 actually. And then we had a nice move to the upside. I left a couple contracts again, so 10 contracts left in. They went down 30%. I was like, bro, like these contracts are getting fucking cooked. Obviously because it's 0 day data expiration, so it moves pretty fast. I was like, dang, these last 10 contracts are getting cooked. But then I was like, oh, dang, we're gonna reject. The volume RSI is still low and flat. So entered more here, and then these contracts ended up going 175% all the way down to the 200. I just left them in. I left hundreds of contracts in. I said, I don't care. If it goes to 0, I was like, if my thousands of dollars go to 0, I don't care. Because it was kind of annoying. I was like, I know this is gonna make this downside move. We're faking this push up and we're rejecting my key level. My key levels are the best in the world. So I was like, all right, F it. I just got 53% here. I got 100% there. I made really good money for today, but I was like, you know what? I want more money. And I know I deserve more money. So I was like, all right, if we break this double bottom right here, again, another double bottom, boom, and a kazoom right there. All right, so double bottom. I was like, if we break this double bottom, I'm in. So boom, we broke. I was like, all right, I'm in, fuck it. Volume RSI is super low. Went 175% on these contracts. What contracts did I get? I got the 245 strike 0 data expiration contracts. 245 puts, 0 DTE. All right. And then once we hit that 200 MA, I didn't wait for that. I exited somewhere like right in here. Yeah, right here. Because I set a sell order at 150%, but it moved so fast that like I got filled really, really good. So and I told the group, I was like, hey guys, I'm selling, I'm at 120% on my contracts, which was like around right here. I was like, I'm gonna set a sell order, and if that sell order executes, it's gonna be at 150. And I got filled at 175, so I was like, damn, it's insane. And then I thought we were gonna continue, but then I looked, I was like, oh damn, we just hit the 200 moving average on the 2 hour, or on the 5 minute time frame, which usually is a very good indication that we are way oversold. And we were, so we ended up moving back to the upside. But I didn't take advantage of that upside move. I only took advantage of the downside throughout those 3 sets of trades there. First trade was obviously calls. Anyways, hopefully this helps you, or maybe you look at these videos like, all right, what's he looking at? Well, that's what I'm looking at. Discord, I look at more stuff, I look at more stocks. So if you have any questions, you can ask me questions there. If not, just continue watching these videos. Who cares? All right. It's your boy, Mr. Fit to Flourish, and I am outie.